So Jeff, what did you think of Jeff B's governor run?
I actually thought it was really fun. I mean, I hadn't been involved in politics at all. I wasn't super involved, with the governor run, but just going to the events with him, some of the fundraising events and like his public announcement on the Capitol steps. Like, I just thought it was really interesting and fun. And it kind of inspired me. We had gotten pretty involved with Mitt Romney's presidential campaigns. And then it kind of inspired me to get more involved. And we've all of us have gotten pretty involved with like John Curtis's various races. And so, yeah, I thought it was fun and interesting and definitely something I kind of wanted to get, more involved in, more exposure to over time.
Did you try to talk him out of it, Jamie?
Maybe loosely.
You don't know me, Clint.
Jamie knows me. Jeff out of anything.
I presented some cons and let him like decide.
Gentlemen, thank you so much for coming on the show. You have a big announcement. Jeff, since we share mustaches, I'll let you go first. We've known each other for a long time. The four of us have here, and you've been doing a lot of incredible stuff at Peak Capital. You launched Peak Ventures. I believe I wrote the first article about Peak Ventures.
I think you did.
Way back in the
We've
day.
done this many times, you
we've
and I.
done this a lot.
How many times have we done the podcast? It's been fun just thinking of the memories. And StartFest. You remember StartFest down the road?
StartFest. And you guys were our biggest sponsor, actually. Peak Ventures was our biggest sponsor at StartFest.
Oh, good.
Oh,
In
nice.
2012? No, that was more like 2017.
I was going to say 17.
Yeah.
Okay.
Yeah. But now here you are. You've got a whole new approach, a new name.
Yeah.
Tell us about it.
Well, yeah. I mean, the Peak Ventures legacy kind of has continued on. We've been so fortunate to invest in so many of the up and coming founders over the last 10 or 15 years here in Utah. And when I ran for governor in 2020, that brand kind of transitioned to Album, of course, and that made good sense for then. And then we've been very active in investing kind of out of our family office since then. So we've renamed our family office to Element, I guess, guys. That's what it's going to be. So I don't know if it's a big announcement, but it's a little announcement. And we've been a super active investor for 15 years, as you all know, in the state. And we look forward to continuing to do the same. It's fun.
Yeah. I don't know that people know you two as well, and they should, because you're much better than Jeff.
Yes, much better.
Better looking.
Not better looking, but otherwise better.
Let's introduce yourself.
Yeah.
So yeah, Jeff Danley. Grew up in Utah and met Jeff in 2006 and kind of immediately was like, yeah, let's start a business together.
Yeah, it's a funny story.
Yeah. Started Peak 6 months later.
Yeah.
Really? So how did you guys meet?
Through Jamie.
Okay.
Yeah.
Yeah. So Jeff B and I were friends at BYU. I had co-founded with a friend the Management Consulting Club. And then Jeff, our senior year, got pretty involved and we were practicing interview cases together. And
day trading, losing money. Yeah.
We made money.
Let's not bring that out. We made money for a while.
Yeah. We won't talk about that.
Okay. Yeah.
And then we went off and did different things. I went into consulting. Jeff started a company and we stayed in touch. And then during graduate school, I was in Philadelphia at Wharton. Jeff Danley was at Tuck at Dartmouth, and we met at a event in New York City in Central Park, literally. And Gavin, how old's Gavin now? 19?
He's 20,
He's
almost
20.
21.
So Gavin's in a stroller. I mean, this was we were young dads in business school, but we had very similar interests and goals. And so, yeah, I think Jeff was in California, but was going to be in Utah. I'm like, you need to meet this other Jeff.
Yeah.
I'm in Charlotte, North Carolina. They had lunch, and I get voicemails from both of them within like 5 minutes of each other. Like, let's do something. I like that guy.
And how did you land on, like, the first fund was real estate, right?
Yeah. Peak Capital Partners is the first company that we founded. It was during the Great Recession. I remember the first couple of days we come into the office here right in downtown Provo at the old Zions Bank building. And like Lehman is going under, AIG is failing. And we were like, what did we get ourselves into? You know, we knew there would be a pullback in real estate, and the idea was to buy
a total collapse.
Not a total collapse, yeah. And buy as much affordable real estate as we can. That was really Jeff and Jamie's background. And after I sold my first tech startup that I started at BYU, we sold it to a NASDAQ listed firm, and I started investing in real estate. So yeah, Peak Capital owns, you know, I don't know, I think we've owned $7 billion of real estate over the years. And that was our kind of our core business. And that's what we started up in very late 2006. So that's been 18 years ago.
Yeah.
Wow.
Yeah.
Did the kind of crash in a way help you?
Oh, absolutely.
I would imagine, right?
So when we were, Jeff Danley and I had been out of business school when they met for like 4 months. I mean, we were still sort of making our way. But we both sat there, we were watching for the next year, the markets, and it was clear, we didn't know exactly how it was going to play out, but it was clear that there had to be a major correction. We don't need to go down why that is, but there had to be a major correction. And we felt like it was probably a once or twice in a career event, at least from a real estate standpoint. And so now we were probably a year or two ahead of the real damage.
Yeah.
And so that first year or two we were actually one of the crash to come faster and more furiously. It eventually did, and we were able to survive until it made sense to start buying. But it was good for us.
And I think we were able to survive on grit, kind of determination, this vision, and also we got groceries on our doorstep. Some of us, I mean, it was lean times. We did not know.
My in-laws.
Yeah, Jeff moved in with his in-laws. That's a sacrifice right there. I mean to move in with anybody's in-laws. Jeff's in-laws are great,
I really
by the way.
his in-laws, but I don't know.
I love his in-laws. But it's never fun to necessarily move in with your in-laws.
Yeah, that wasn't the goal.
We kind of barely scraped it by, but once we turned it around, as you know, we turned it around quite significantly. Peak Capital's been one of the fastest growing companies in Utah for a decade.
So how did you know how to build a real estate?
Jamie and I had
this.
both worked at real estate companies prior to business school, and we had worked in multifamily. So we knew that industry. We each had, 4 or 5 years of experience in that industry. And then the timing, as we were graduating business school and we went and took other jobs, and it just became obvious pretty quickly that there was going to be a recession. We didn't know how big it was going to be. No one did, but it just felt like really good timing to start a firm to focus on, buying multifamily.
And so, crash happens, it starts working almost insanely well. Were you surprised by how well it started working?
I was. I mean, it took some time to get going, but like I said, when we turned it around, man, we spent, this is how startups are, as we all know. We spent 2 or 3 years digging ditches, right? Like we were establishing relationships with LPs or investors that would help us buy real estate. We were establishing relationships with brokers in different markets that we liked. And sometimes it felt like we weren't making progress because we couldn't buy anything to start. But once it turned around, I think it went pretty quickly. And
the most important factor, I think, in any investing is timing, and the timing was just tremendous, And that was nothing. That was just the market, And it happened to just be probably the biggest real estate recession ever, and we were starting right at that time. And so then kind of rising tide lifts all boats.
Yeah.
But I will say for the entrepreneurs, just real quick, that was not that clear then. Like we did not know. It felt very unsteady and uncertain. Now looking back, we know that it was a great opportunity to buy, but that was not as clear then. And that's how it often is for entrepreneurs, right? Like it's murky at first before it's clear and before you inflect and can scale. Yeah, go ahead, Jim.
Yeah, I was just going to say, I think at the time our heads were down and we were working so hard that we weren't necessarily like watching thinking, oh, this is going better than I thought. I think looking back, you feel that way and we feel very fortunate. But at the time we're just grinding and building something that turned out to be great.
Yeah. And speaking of timing, so you had Peak Capital Partners doing really well. And then was it 2013?
Yeah, like probably about 5 years in. So start the end of 2006, Peak Capital Partners, probably about 2011. And I'm just having a memory. I was with Kirk Wiemet last night at the Jazz game. who founded a cool company, Stack, that we've invested in.
I have his little, yes, somebody just brought me one of those.
Yeah. It's a really cool, one of the founders we've been fortunate to back. But he and Garrett's company, Scan, if you remember, was the first company that we looked at. They officed with us a little bit in Provo. And we started thinking, it was the first time that we had a little bit of extra capital, the three of us, to be able to invest in something other than our real estate. And I'd say this is in 2011 or 2012. And we sat around a little round table like this in our conference room and said, where should we invest this new money? And I said, I know exactly where we should invest. There is an undersupply of good capital, which there was then, and an oversupply of good entrepreneurs. And Jeff and Jamie readily agreed. And we got pretty active pretty quickly. And again, looked at Scan. We actually didn't invest. We should have. They sold obviously to Snapchat. But the first investment we did make was into Kurt Workman at Outlet. That was, we saw Kurt pitch at BYU.
We're in one of Outlet's old offices right now.
Is that right? Oh, is that right?
Outlet used to be here.
Yeah. So Outlet was the first kind of personal investment we made. We made a couple others. I think maybe MX. I don't want to misspeak. We kind of seeded those into our first fund. So yeah, that was 2011 and 12. And I think Peak Ventures Fund 1, I think happened in 2013. So 11 years ago. Yeah.
Well, this is what I'm saying. Like 2013, you wouldn't have known this. I didn't know this. But 2014 would end up to being the seminal year in Utah Tech, right? Like that's when
Things
Ryan
changed,
announced that he'd gotten Sequoia Capital and over $1 billion. And then like a week later, Aaron did. And then like a week later, Josh did. And everyone's like, what is happening? And we started getting like all of this national press, which we'd never gotten before. Those guys got a lot of press. But then at the same time, you had these entrepreneurs like Blake Murray and Eric Ray and Ryan Caldwell and Brandon Rodman and the list goes, Carl Son, like all these people who were like here and they're all just like, we're all just like shoulder to shoulder. We're like, this could be huge. Right? I remember sitting there like when just doing Beehive startups and knowing, all those guys. I was like, man, this is going to be nuts. Like,
weren't those exciting days? Those were so fun. That was like the startup. And yeah, that's what Peak Ventures came right into.
Came right into it. So you announced in 13, I think middle of 13, and then 14 was just nuts.
Yeah.
14 was just nuts.
Yeah. And we've been fortunate to back most of those founders that you just named and are still, and have now backed like Previ. We just invested in Brandon's second company after Weave. And it's fun to kind of follow people's trajectory and continue to work with people that you love and people that you've had ups and downs with and success. And
yeah, I mean, it was a perfect fit at a perfect time because from a personal investment standpoint, we had virtually 100% of our net worth in real estate, which is great, but it's never smart to have everything in one thing. And venture early stage angel is such a great complement to that because we have very stable, consistent cash flows over here. But, you're never going to have 10x, you shouldn't say never, but rarely will you have sort of huge returns in a real estate investment. Whereas, venture is almost the exact opposite. And so it fit really nicely. And so we had this real estate machine starting to work. And then we're in the right place at the right time in Utah at that moment. So it was it was just sort of a nice meeting of a variety of variables that worked out for us.
And also in Provo, which at the time I was like, oh man. I remember like meeting you, I'm like, yeah, there needs to be a fund in Provo, right? Yeah. Because that's where they all were. That's where everybody was building funds. And going, and there was no funds. Yeah. Everybody was up in Cottonwood Heights, which is great. And they'd come down to Provo. It's not like Cottonwood Heights is forever away, you know what I mean? But like somebody who was in the community here in Provo. And then you bump into like just down the street, you had Eric Ray working out of the top of the bike shop.
Yeah.
I can't even remember what the name of the company was until it became
Rev Drive. Yeah. Good memory.
Yeah, Rev Drive.
I was hesitating. Yeah, now it's Podium. And that was the first fund investment we made. So, and I'm kind of realizing here, we're kind of maybe going back to our roots because at first we were just investing personally. Yep. And then honestly, kind of the momentum and frankly, investors, LPs in our real estate kind of pushed us to raise a fund. And I would say for 6 months-ish, we were kind of hesitant on it. We didn't know if we wanted to do that.
We had to seed it with the deals we'd already invested in that we liked.
Yeah, like there was a lot of uncertainty, but we felt strongly like you did, Clint. I remember having a meeting with then Mayor Curtis, now Senator Curtis, but Mayor Provo.
That's the other thing. John Curtis was our mayor.
Yeah,
those were great times.
They were. Cascade was singing right down here at the Friday night concert series. Yeah, that was fun. But talking to him and saying there needs to be a fund in, let's say, Silicon Slopes in Utah County. There was no institutional venture fund at that time. And so Peak Ventures was the first. And it was a great ride. It's always about the people that you do it with and the people that you back. And it was so fun. It's fun to remember kind of those days.
So that was like a spin-off almost. Like Peak Capital still controlled Peak Ventures and owned it and all that, but it was a different,
It was a
totally
separate sister, like it's a separate company. I mean, it's similar ownership, but a separate company.
Yeah, and a sister company, so to speak.
Company.
And I would say Peak Ventures was maybe a little bit of a lazy name, meaning it was, Peak Capital.
Yeah.
Obviously, we didn't have a track record in venture. So it was nice to maybe leverage the Peak Capital track record, which was great at the time.
Particularly for LPs wanting to.
For LPs, yeah. And we had LPs in our real estate that wanted to invest in venture, but it wasn't maybe really well thought out at the time. So that's why the transition to Album and then the transition now to our family office of Elements, it was a little bit more thought out, at least maybe than Peak Ventures.
But you're right. This is a little bit back to the roots.
It is because we're kind of going back. Yeah.
Because now it's just us. Element Ventures is 100% our capital.
And that's really how
early on.
And that's really how we've probably made 100 investments since the governor run in the last, maybe more, in the last maybe 4 years. Yeah. And it's really been, obviously we invest, with our own fund, with all the Kickstart, Pelion, all the funds, and which is great. But it's been fun to obviously see the rise of family offices and to do deals with Todd and Ryan and Jeremy and Alex Dunn and, all these kind of family office angel investors. And that's really what we've been doing since post-governor run, is investing out of Peak Ventures, which is now Element, but really just our own capital, not third-party capital.
Well, that's what's kind of become like the powerhouse now. And not that the funds are obviously powerhouses in and of themselves, but these family offices and these people who've been super successful are now coming in and man, they have a war chest.
Yeah.
And they can do deals super quick because it's just like, I like you, go.
Yeah.
Do that. You know what I mean? Like the family office story is going to be really interesting thing, I think, over the next 10 years. And all, like you've got Sconard's, you've got Jeremy Anders's, you've got, Josh's, you've got Ryan's, you've got yours, Todd, you mentioned, Alex Dunn. Like there's actually a lot.
There's a lot.
There's a lot.
Yeah.
And by the way, they have tons of cash.
The Millers. There's
Miller's. Yeah, Miller's is maybe the biggest one.
And it's a nationwide phenomenon. This is happening kind of like there's going to be an interesting battle between family offices and more institutional investors over time. It'll be fun to watch how it evolves. But yeah, you're absolutely right.
Well, the nice thing about a family office is you get to make the picks you want. You don't have to worry about fees. You don't have to worry about
you're not investing third party capital.
No time frame constraints. You don't have to be out in 5 years or whatever the fund structure might be.
You're not limited to industry or stage or So there's a lot more flexibility.
Yeah, one of the hard things about funds that maybe a lot of people don't know, there's a time frame that you need to make things happen in. Within a family office, there isn't that. And like Jeff said as well, there's also you need to have a real focused mandate. We've been investors in all these kind of startups that we could mention or talk about, some of which we have, but also other later stage companies. I'm just like Frazzle. I'm just thinking of one that's not tech, that's slushy, and many other kind of later stage companies that we've invested in, which is fun. It gives us more flexibility to do later stage deals as well as continue to do early stage.
Silicon Slopes Summit is Utah's original and longest-running grassroots tech event. It provides entrepreneurs, startups, and leaders the resources and community they need to succeed. With the pandemic behind us, we're excited to bring Silicon Slopes Summit back to its original January dates in conjunction with the Sundance Film Festival. We have some unbelievable news. Silicon Slopes Summit is free for all Utahns for the first time ever. You heard that right. Silicon Slopes Summit is now free. For those looking for an upgraded experience, we are also offering VIP tickets for just $95. Thanks to our partners, sponsors, and government leaders, Silicon Slopes Summit is the most accessible tech and startup event in the world. Summit will be hosted in multiple locations throughout the week in both Utah and Salt Lake Valley. There will also be a Startup Alley at Summit this year, where startups and entrepreneurs can meet with investors from around the world to pitch their ideas, receive feedback, and promote what they're building. Of course, We'll be bringing in world-class leaders and speakers, as we have in the past, but we'll also be hosting specific tracks and bringing attendees together for curated networking in a way never done before. You don't want to miss this year's summit. To register, buy VIP tickets, learn about sponsorship, and apply for your startup to be part of Startup Alley. Go to siliconslopes.com/summit.
So Jeff, what did you think of Jeff B's governor run?
Oh,
I actually thought it was really fun. I mean, I hadn't been involved in politics at all. I wasn't super involved, with the governor run, but just going to the events with him, some of the fundraising events and like his public announcement on the Capitol steps. Like, I just thought it was really interesting and fun. And it kind of inspired me. We had gotten pretty involved with Mitt Romney's presidential campaigns. And then it kind of inspired me to get more involved. And we've all of us have gotten pretty involved with like John Curtis's various races. And so, yeah, I thought it was fun and interesting and definitely something I kind of wanted to get, more involved in, more exposure to over time.
Did you try to talk him out of it, Jamie?
maybe loosely.
You don't know me, Clint.
Jamie knows me. Jeff out of anything.
I presented some cons and let him like decide. But no, it was awesome. And I mean, there were we could have 2 pages of things we hated about COVID, but COVID killed him. I mean, COVID hurt. Any sort of new guy.
That whole race. It changed that whole. I mean, you couldn't go out, you couldn't campaign, you couldn't there was.
When you don't have like the political
things.
brand, it made it really hard. Yeah.
I mean, even like somebody like, and by the way, I thought it was awesome that Jeff ran. It was cool to have somebody from the tech community doing that. I remember that debate at Summit, which was so fun.
Yeah, it was.
But yeah, that was getting in there is really hard, and most likely you're going to lose anyways. Like that's kind of, you got to go in there with that mindset. I thought it was really interesting when Huntsman came in.
Yeah.
Mm-hmm.
And even he couldn't overcome that COVID thing. Because when you've got the lieutenant governor sitting on TV every day, explaining like stats and stuff,
right?
And that's hard to overcome for anyone.
Yeah.
Right. I think even Spencer would tell that. Spencer, who's a great governor.
Yeah.
I think even he would say.
He would definitely say that.
Yeah,
that changed
was super
everything.
beneficial.
Yeah. When Rudy Gobert shut down the NBA, shut down Utah. I remember maybe a week after that, I had been talking into the back of my cell phone in my home office. This is before we had even figured out Zoom for like 10 to 12 hours, different meetings. I had no idea if there were 5 people on the other end of the line or 500. You were just trying to talk to people. You're in the middle of a campaign. And I remember just kind of laying on my couch around midnight and realizing for at least a political newcomer, it was over. Yeah. Now I fought the good fight and finished to the end, but it was kind of over. It was either going to be John or Spencer. And by the way, maybe that's always how it would have been, maybe. But certainly I had a chance until COVID. That kind of changed everything.
COVID changed it. COVID completely changed it. That it was hard to be an outsider at that point.
I have a question were you guys surprised that I ran or that's one thing you didn't? I'm just curious. I'm asking you live on the spot. Was it surprising?
Oh, go ahead.
Well, I mean, you told us in advance. It's not something I thought, Jeff's going to run for governor. I never thought that, but it didn't surprise me.
When I first brought it up, though,
It didn't surprise me that you would want to run for political office. I was a little surprised about that you were going to run for governor.
Just went straight for the top.
Just straight to the top.
Like, screw all this. I'm bypassing
But that's
everything.
also just personality, so it's also not that surprising.
It's like, I'm just taking this. So back to Element. I was going to, we were talking about, you have the freedom to invest in whatever type of companies you want. It's not a tech VC fund. It's not a, consumer brand VC fund. What are you seeing in Utah right now that's exciting? Like, what sectors are really exciting for you guys?
Yeah, I mean, obviously we're seeing a lot of AI deals right now and doing a lot of AI investments. So I would say from a sector standpoint, that's probably where we're most active right now. I think what's sort of interesting that the biggest trend I've seen is that we had all these, including Peak Ventures, kind of early stage venture funds in Utah, kind of pre-seed, seed venture funds. And then most of those have grown so much that they can't do pre-seed anymore. Mm-hmm. And so I think where the biggest need is and where we're seeing kind of the most opportunities is at that very early stage, kind of that pre-seed stage, because most of the funds are just too big to really focus on that, right now. And so that's where I think we're seeing most of the opportunities.
Interesting.
Pre-seed's also a lot of fun.
Yeah.
I mean, just sort of hearing these ideas when they're just brand new. I agree with that. Another space that we've invested in that I really like isn't venture at all, but it's we have 2 or 3 sponsors we like a lot who have been at large, mid-sized PE buyout funds, have gone out on their own, and they're buying, mid-sized companies. They're restructuring management teams. They are, aggregating similar companies to sort of scale. Those have been great, and those are some deals that we've really enjoyed.
Yeah, I've seen that catch on over the past, like buying like a bunch of heating and air companies, and putting them together and like bringing in tech.
A few of those.
Oh, did you guys do that?
Yeah,
That's actually like an actual one.
Yeah, absolutely.
Yeah, and like things like that, like plumbing companies and like whatever it is, right? Like that's actually really interesting. In fact, Silicon Slopes' lawyer went and left his day job to go to one of those firms because they just wrapped up a whole bunch of things.
Well, if you
Really
think about it,
interesting.
they're de-risked in the sense that there's already revenue, there's already a proven business model. You're really kind of just helping a mom and pop operator grow. You're bringing in other mom and pop operators. You're putting in a professional management team, so you can generate pretty good returns without the risk that you might have of something that has no revenue yet. They've been good.
What are you guys seeing in energy? I see energy being a really big deal over the next 10 years. And this is just my opinion. I think the most interesting company happening right now in Utah is Taurus and what Nate Walkingshaw is doing, which is, an energy company there. What are you guys seeing there? What are you thinking?
I think it's a great question. We're grateful to be investors in Taurus. So that's an example of another company.
What aren't you guys invested in? I throw out heating and air companies. Like, yeah, we haven't do that.
Dude, Clint,
It sounds cool, but it's also a problem.
Yeah, it is. It's good and bad.
It's good and bad. Yeah.
We've probably done, I'm going to give rough numbers, correct me if I'm wrong, probably like 200 direct deals. And then we're probably investors with the funds that we own and have co-invested in like 300 deals, I think. So, and I would say that 80+% of those, this is another thing that maybe makes us a little different, have been focused in Utah. I mean, like we've been pretty heavily focused the whole time in Utah. We're bullish on Utah. That's kind of how we started in 2011 and 12, being bullish on the up and coming entrepreneurs. And we remain that way. We've raised our families here. We want to continue to kind of promote and build Utah. So anyways, there's some stats, but we're really excited about energy. Obviously, that's a political conversation. Utah has an opportunity to really capitalize, I think, here on the energy assets that we own and have. And we continue to invest in innovative tech like Taurus. And I'm sure there are others that I'm probably forgetting that we've invested in.
Yeah, one thing that I think's been great for Utah is, and I'm proud of John Curtis, how, what he's done. He created this Green Caucus, which is sort of ironic that a Republican did that, but his approach is so common sense. And I think with the administration change now, there's going to be a lot of common sense approach to sort of renewables and just the environment. And so you're going to have Tauruses that I believe will continue to be successful, but we're also invested in a lot of oil and gas deals and ancillary sort of business deals that I think over the next 4 to 8 years or 12, we'll see.
And
could
several
do really
solar,
well.
several solar deals.
And I think all of them can succeed. It's not an either or, which it sort of has been the case. So I think it's going to be a great, next 4 to 10 years in that space as an investor.
It does seem like from the seat I'm sitting, like I still think 2014 is like a seminal year. It's like a year we're going to look at as like when the dam broke. Basically, it's not like, that's when everybody started their companies. No, they'd been building it for 15 years, but that's kind of like when the dam broke, right? And things started to happen. And then I think 2017, 18, when they, a few of them started going public and stuff, that's a big year. I think 2025 has a real chance.
Amen.
Like I'm really liking this early stage now, like this new class of entrepreneurs coming up.
Well, this is a virtuous cycle, right? Like we talked about the rise of the family offices, including ours, and it's the more capital options for entrepreneurs, the better. So whereas Peak Ventures was maybe the first kind of institutional fund, we now know that there are several here, which is great. You have the rise of the family offices like we've spoken about, and this hopefully, if people can make good investments and there are good operators in the state, which there are, this becomes a very virtuous cycle. And so now we have I wonder what Clint, maybe now the 4th or 5th wave. I don't know. It's probably the 4th, 3rd or 4th, 5th wave of these startups.
Paul Alstrom. Paul Alstrom knows the waves.
Yeah, that's right.
I never know. I always am like, I don't know.
But the point is we have like Redo with Sterling Snow. We have these up and coming companies that are going to continue to kind of cascade. And I think it's continues to be super exciting over the next several years.
Why do you like 2025? Like, what makes you say that?
Well, it feels like we're finally past COVID.
Mm-hmm.
We're past we'll see, but this is just my take on it. We're past a very divisive time in our country. Like, it or not, how this just happened.
Hopefully, right.
Like it or not, what happened, like in this election, it's over.
At least it's over.
Yeah.
Right. And you have some clarity on what the policies are going to be, what, I think M&A will start opening up if in tech and all of these different things in a way that it hasn't for the past 4 years. But I think the big thing, like it was really like 2017 or 18, I can't remember which year when they went public. And then we haven't really had a huge year in Utah tech yet since. And that's primarily because of COVID, right? COVID was a great year for a lot of tech companies for a second. And then it was like a really bad. And then it was like kind of wild. So I don't know that the COVID year counts. But I just see it as, don't you think like it feels like,
I think
feels
you're
like
right.
things
we're
are
on the precipice of something.
Markets hate uncertainty, and there does feel to be a little bit of certainty. That's maybe the caveat to the election. However you feel about it is, at least it was pretty certain, and there was a little bit of a mandate. And that's a beautiful thing, by the way, about our system, is that it seems to be self-correcting or self-healing in some way, and the people's voices have been heard, and markets do like that.
It just felt like the return of common sense a little bit.
Yeah.
And I think that'll be really good for the
We'll
markets.
see how long that lasts with Elon and everything else.
He got the whole department named after his coin. That's pretty awesome.
That's pretty cool. Yeah. What do you guys think of what's happening on the national level? You got like Elon, obviously the biggest name in our industry and any industry probably in the world, right? Anybody besides Donald Trump, he's probably like the most famous person outside of Donald. He's doing incredible things. And you got a lot of tech people coming into this administration too. You got David Sachs, you've got, Vivek, or, I think he was more biotech, but it was still, So how are you feeling about just kind of the people who are around there now? By the way, I think it would have been either way, just to be clear, like even if she had won, clearly we would have had some clarity.
I agree.
And we probably would be going into 2025 with the same mind. So I want to be clear about that, but it is interesting how it played out. And how are you feeling about, like, there certainly is a lot more of people from our world in this administration than I've ever seen in any administration.
Yeah. You guys want me to answer the political question, or do you guys want to? Go ahead.
I mean, I'll share my opinion.
Yeah, go ahead, James.
I mean, I think a government like any organization over time, it bloats. It gets really big. There's so much inertia. It's just hard for an organization to stop itself from getting unnecessarily big and bureaucratic. So, I mean, I don't know. I'm stoked about the Department of Government Efficiency. It'll be super fascinating to see if they can actually enact change. But I think it's great. I mean, anytime you can have, this reaps philosophical, but there was a book written like 300 years ago by a Frenchman named Alexis de Tocqueville about America. He came over and studied America right when it was starting, called Democracy in America. And his point was, this system's incredible. The best people will never be in government. Throughout the world history up to that point, the sort of you wanted to be the leader of the whatever, whether it was a democracy or a republic or you had a king. In either way, the best people want to be in government. And he's like, this is a place where the best people aren't going to want to be in government. So to see some of these people that have been super successful in the private sector hopefully come in and bring some of that to the government, I think it has to be good.
Yeah, you would think so.
Yeah,
I think the Doge thing is really cool, and I don't fully understand. I don't even think they're an actual government agency, right?
No, which that's gonna all have to get better. I don't know how that's gonna happen.
I don't really fully understand how that works. And like, I
don't think they understand how it works. Just so you know,
what's
so like
cool
this is being figured out on the fly.
It expires in 2 years, like that the whole thing shut down, which is actually really cool too.
Mm-hmm.
Like they kind of have to eliminate themselves.
But Elon's daily tweets, I'm sure you see them, where he highlights, something about it doesn't matter. The stuff we've spent money on is wild.
It's crazy.
It's wild.
Well, I think that's definitely a good principle. Just the ending, I think it's July 4th, 2026, the 250th,
exactly.
which is awesome. But that's just a good principle in government in general. When I ran for governor, I realized the amount of legislation that was being passed in Utah. And one of the ideas that I spoke about was that for every new law we passed, we should have to cut one out of the books. And so this goes to your kind of bloat and inertia. And I think it pays all of us, although who knows what's going to happen, and it's an exciting and potentially scary time. I think we need to be optimistic and hopeful, right? And believe that hopefully they can pull this off. And maybe it's in a little bit of the nick of time in terms of spending. Like, I just don't know how we can keep up this spending. And so fingers crossed it all works out. And definitely, obviously, you've seen the crypto markets, you've seen the stock market. Markets love certainty. And so investors are generally feeling better. And that's going to bode well for the startups that raised capital 10 years ago and have been, or 5 or 10 years ago, and have been kind of stuck in this middle ground since COVID. They're going to have opportunities for liquidity, opportunities for M&A and different things, I think in 2025, 2026 that they haven't had in a while. That's exciting.
Everything you just said, plus AI. And we're just at the very beginning of that. And what's going to happen in 2025 in AI? I mean, we could even, we could get AGI. Like, it's crazy. Like who knows what's going to happen in that certainty plus the advancement of a generational technology is pretty wild. That's why I think you converge here in 2025 and something pretty magical is going to happen. What do you think about Utah historically kind of being unable to build generational companies? Why do you think that would be true? I think we have a couple now. I think we have a couple, I think Qualtrics will be around for a long time. I don't know, but I think Qualtrics is going to be a staple like that. I think Entrada, there's probably a few others, but I'm not entirely sure. Like, we don't do that very well. And I wonder why.
I have a couple opinions about that, and then maybe you do, Jeff. But I think, we were a startup state. I'm saying going way back when, but even in 2014, we were just trying to get on the map. People hadn't heard of Silicon Slopes. They had no idea. And so I think when you're starting up, oftentimes maybe the off-ramps are more attractive or they come quicker or whatever. But my point in all of that is to say, I think that's changing. I mean, don't you guys think that's changing? Like, I think just this small rebrand of our family office and all the other family offices, I think that that's a mindset that's changing. And you have entrepreneurs, I won't name names because there's too many of them, that I think are really thinking differently about this. They're not looking for a quick exit or to sell for $100 million and then they're good. I think you have a lot. I mean, I've said a couple of the names, I won't say anymore, but I think you have a lot of founders here in Utah that are looking at that much differently and are looking to build these kind of generational type companies.
Yeah, I think just adding on to that, I feel like the mindset the last 15 years was more like build it and sell it. And then you also, I don't think, had that sort of second generation of management talent here in Utah where you could turn the company over to kind of professional management, not the founders. I think that's changed where a lot of the entrepreneurs we're meeting with now or companies we invested in 5 years ago are saying I want to do this the rest of my life. I want to build this to be bigger than Qualtrics, to be the biggest company in Utah, to be bigger than a lot of the companies in Silicon Valley. And then I also think we've had a lot of kind of more call it professional management that have come from some of these big Silicon Valley tech companies that have moved to Utah and are looking for opportunities to run big companies. So I'm hopeful that that'll change because our mindset is definitely more long-term of let's not grow it and sell it. I mean, that's great, but let's build generational, really companies that can change the world,
Yeah.
And I think we can do that in Utah.
Yeah. I think we can too. How does AI change venture? Because I was thinking about this recently. Because do you guys use Perplexity? That kind of really, it's it's better than Google. There's no reason to use Google anymore. Use Perplexity. Anyways, I was on there and I was I just typed in how much is this company worth? Who are these people? It gives me 1 million sources. All of a sudden I have all this information. Whoa, that's going to change a lot of things. Can that help with deal flow at the early stage? You kind of plug in all of the data and it kind of spits out here are the 3 companies you should meet with?
Yeah, I think so. I mean, AI is going to change everything. Obviously, it's a much bigger question than just venture. And that's, by the way, the next thing I've been working on is a book about AI and humanity.
Oh yeah.
I think that'll come out next year. But so I've been pretty deep in this, and I haven't looked specifically at venture, but obviously it's going to change everything. I will say though, venture is a relationship business. I mean, it's kind of a cottage industry, smaller relationship business. And I think that won't change. You really back whenever we make an investment, the first thing we're looking is always about the team. And by the way, for any entrepreneur that's looking for money, the first thing they should look at is the investors they're talking to. They should do diligence on the investors that they're talking to. Is this a person that plays nice? Is this a person that we want on the cap table? Is this a person that can help us? Is this a person that will be there and be steady in the down times and in times of need? Because every startup has that. So the point is, AI can't automate that. I think it still continues to be a human business, but obviously what AI can do better than any human is gather data, synthesize data, notice patterns that maybe have not been apparent to us before. So I think in all those ways, it will certainly disrupt venture and every industry. But I think that human element remains, at least, let's say, for the foreseeable future. I think that remains.
Yeah, I mean, it's an interesting question in the investment world generally, right?
Yeah.
Can eventually AIs just make investment decisions? At least so far, it feels like AI is as good as you tell it to be or teach it to be. And so maybe it's not who's the best investor, it's who's the best AI trainer. But I do think there's still going to be, at least for the foreseeable future, an important human piece to that. But it's going to be fascinating to watch.
I think a lot about what Sam Altman said when he said, there is going to be a company within the next 10 years that's a unicorn valued at over $1 billion with a solo founder. Just one person did that. It blows my mind.
Yeah.
And if you think about that, then that kind of affects your business in a big way. Like, what if you only need like 2 or 3 people?
Yeah. And I
mean,
mean,
to raise capital.
Yeah.
Yeah.
I mean, that's the good news is it's never been easier to start a business, right?
Never.
It's never been cheaper.
Yeah.
And so those are the good things. Obviously, the hard things are, what do humans do when a lot of what we've been doing is done by a machine, is done by AI? So there are a lot of existential, I think, questions that kind of come into that. But and one other thing I want to say about that one founder, Sam said that we kind of had that with Bitcoin. Like, think about right? Like we had, the point is that's been coming, that's been happening. Like, Satoshi,
the original,
whoever that is, you created obviously
could have been multiple people.
Yeah, it could have been. But still, the point, I guess the point is that momentum has been going on for quite some time now. That's not new.
We'll talk about back to our roots. AI can't create real estate.
Yeah, exactly. Like the physical world, you just got to get insurance.
Yeah.
You still got to get like, healthcare, like all that type of stuff is, it kind of just makes sense in certain aspects of the world, although it will affect all of those industries without question. What did you guys think? Like, remember when Web3 was a big thing?
Yeah.
And, blockchain, everyone was like talking about, that was like pre-AI. Everyone was like was a blockchain company. Now everybody's an AI company. Do you think we're just moving on from that? Or do you think that's going to be growing steady and coming back?
This was right after the governor race. When I lost in 2020, I flew out. I grew up in Spokane, Washington. I love Lake Coeur d'Alene, Idaho. I went there with my family for a month to just try to decompress. And I'd also taken 18 months or so off of basically venture research. So right when the summer of 2020 was kind of, in 2021 was Web3 and all these things. No, I think that I don't want to speak about Web3 specifically, but like blockchain, crypto, the metaverse, maybe. I think that those things continue to have legs. Maybe just it's taking longer than we maybe thought. And I think AI enables a lot of those industries. So I remember one of the fads that I was really into that these guys never were, Jamie wasn't, was NFTs. We had a bet about, because some of us around this table really enjoy art and collecting art. And I remember when NFTs were exciting in 2021.
It made no sense to me, but but people were coming up to me and they were like, "You got to buy this ape. It's $40,000. You just got to put $40,000 and hold it for 6 months." I'm on what?
And where is it? It's on my phone.
Anyways, we had a bet. I thought Jamie would become a little bit of an NFT collector. I think this is in 2021.
Yeah.
And he hasn't, by the way. So anyways,
yeah.
I like the principles behind it.
I like
the overall principles of like that type of contract and be able to sell like that. But
sure.
Yeah. I like the smart contract.
Yeah, that's a different deal.
Those types of things are really cool.
Yeah. They are really
But the actual, like, I didn't understand. That was crazy. Are those still a thing? I think, remember there was this like website that was a big NFT marketplace that was something like that.
Yes.
Yeah.
OpenSea.
Yeah.
I mean, they're still kind of a thing, but not really. Obviously.
Yeah.
At least not right now.
Obviously people have made a lot of money on Bitcoin and Ethereum. I will say, and I think this is true of most investors, we haven't made any money on any Web3 investments.
Yeah.
Like they've all been, some are still alive, but none of them have been successful yet. But I do think, like Jeff said, there's definitely a place for that. And there's going to be some interesting companies that emerge from that.
As an example, someone brought us an idea a number of years ago. It's a great idea and it will happen someday. We didn't invest in it because it might be 20, 30, 40 years. But for example, every single tenant that moves into one of our properties, we have to do a background check, make sure they don't have a criminal background, make sure they paid their rent. All that should happen on the blockchain, right? And I think it will get there someday, but it's just not there yet.
Yeah. Yeah, I was watching it when it was big, and the biggest proponent of it was Mark Andreessen at A16Z. He was like going around saying it's going to change everything. Hey, well, and he's got Chris Dixon, who wrote that really cool book. And I know he still believes in it, and I think he probably thinks AI is just like an extension of it. But I was listening to a podcast, and he's like, yeah, now creators are going to be able to own their content and get paid for their content. I was like, I think we already do that.
Yeah.
Like I didn't really understand it. I was like, do I not own my content? Do I not? Does Stripe not exist? And I'm not entirely sure what's happening here.
Yeah. Taylor Smith's not poor. Taylor Swift isn't poor, right? She's doing okay on her content.
Yeah.
I didn't fully understand what he meant by that. Like the whole read, write, own thing. It didn't make a ton of sense to me. What do you guys think about consumer brands? It seems like we're doing really well with that here in the state of Utah.
Yeah.
How do you think that shapes up?
Well, I think that's just maybe we've lagged behind a little bit in that. Obviously the coasts kind of set trends oftentimes, LA in terms of consumer as well as New York. And I just think that is another example of like the market becoming more robust and more mature. And I think Jeff made a really good point. Like we haven't had maybe the talent that in 2014, we maybe didn't have the talent for all of these types of things. I think in 2024, we have a lot more diverse talent. And I think consumer brands are exciting. It is, like Stack's an example. I think it is exciting, those opportunities. And I think we'll see more and more of that in Utah. I think that's a trend that will continue forward and one that we're excited to follow and invest in.
Yeah. I mean, we haven't historically been big consumer brand investors.
No one in Utah really has. I mean, that just hasn't really been one of our things. It's been B2B SaaS, right, Clint? I mean, really, it was B2B SaaS.
That's what I wanted to ask you.
In 2014, it was B2B SaaS.
How long does SaaS keep going? Like, how long does that model stay? Because we are great at that. Maybe the best at that outside of Silicon Valley at SaaS, right? But how long does that gravy train grow?
Who knows? I don't know if it continues to grow. How long does it continue on? I think quite a while because it's fairly entrenched. I don't know if it's a growing niche, so to speak, right? Like I'm not super bullish on that growing, but it's pretty entrenched. I think it will be here for our lifetimes or for another decade, 2 or 3.
Yeah, I agree. The growth has slowed a lot, but I think there'll still continue to be opportunities.
I mean, every market reaches saturation, right? There's a saturation point. I think B2B SaaS is almost saturated. People are tired of monthly whatever's on their credit card bills that they don't even know, recurring charges. Not all of those are SaaS, I understand, but some of those are. And so I think you just see some market saturation and fatigue. Those come and go in waves. And so there'll be a new innovation. There'll be something else that comes along that will disrupt that industry. I mean, that's how disruption occurs.
With that being true, what advice would you have for entrepreneurs who look at, hey, for the past 20, 30 years, Utah has been fantastic at software as a service. That whole model. We know the model. We're really good at it. Like really, really good at it. I don't think anyone's better than us other than Silicon Valley.
Yeah.
We're really, really good at that. What advice would you give to him now? It's like, I don't know that that's going to exist in 20 years, man. Like maybe you should be thinking of something else in terms of an approach and a model for building a startup.
Well, I teach entrepreneurship at BYU now to 400 or so students. I have been since the governor race or so. And what I will tell you is that the students generally, and I've seen this over the 4 years that I've been teaching, they're drifting further away from SaaS, generally speaking. And so there are some companies that are still SaaS based and looking at that. But I think you see a lot more consumer brands, a lot more physical products, a lot more IoT products. And so I think that's just kind of a general trend. But the thing that I think I would say, and I say to my students every week, is you got to do what you love. And I don't want to get to, I just want to say, like, what a ride we've been on, guys. Like, we are fortunate. We're fortunate to live where we live, to have timed the real estate market the way we did, to have gone into venture when we did. And I think that was a function of us following our passion and following our intuition.
Yeah.
And so anyways, that would be my best advice follow what you love. Like, life is too short to not do what you love. So the point is, if there's an entrepreneur that loves B2B SaaS, do it.
Yeah.
If there's an entrepreneur that doesn't like it, do something different. We got to follow what we love. And I'm just grateful to be with you guys today, to be in such a beautiful place, to be talking about the good old days and to have partners. I mean, we started with nothing, with groceries on our doorstep, and now we've grown something. And to have been through thick and thin and be together and all, there's beauty in that, at least for me and in my life. It's been enriching. And so thank you guys. And I'm just, anyways, that's what people really want, right? So anyways.
Yeah.
I don't know that
was a little philosophical.
Yeah, I don't know that it gets too much better than that. How do people pitch you, and what are you like? What type of entrepreneurs are you looking for? Like, say, like people are like, all right, Element's here, an like an option for funding here in the state of Utah. What do they do?
Yeah, I'd say most of the opportunities we look at are on the earlier stage side. So like pre-revenue, pre-seed, seed, and so earlier stage companies. A lot of the founders that pitch us are coming out of companies that we previously invested in, whether it's Podium, Divvy, and so that's where a lot of our network comes. But we've been around so long, I think we see pretty much everything that's out there.
We have a website.
Yeah.
We do have a
Is it
website.
Element VC?
Element.ventures.
Yeah.
Element.ventures. So we do have a website. I don't know. Will we do
and we
any
have a team,
social media?
We have a team who,
I don't know.
who vets incoming ideas. And so, yeah, if someone wanted to reach out to us, that's one way to do it if they don't have a direct connection.
Well,
already.
one thing, like, just for like people who've never even done this before, how do they get in your conference room? Like, what would be a good way? Like somebody
always,
like a referral from somebody you guys know, it seems like is the best way.
Sure,
that's
true.
But if you don't have those connections, like how do you get in your conference room?
I think you reached out via LinkedIn or you reach out to Connor.
Yeah.
Connor at elementventures.com. Like he was actually the CFO of my gubernatorial campaign, sharp, young up and comer that we hired a couple of years ago to kind of help us manage our family office venture portfolio. He's very responsive. He will kind of do a pre-vetting of the company. And then I would say, we're also anxious to meet. So I don't think it's too hard to meet with us.
No.
Connor will set up a meeting, usually with one of us to start. And then if one of us kind of will take the lead on that deal and one of us likes it, then we invite the three of us. And usually it's three, but sometimes it's just two of us. We have another meeting, we do our due diligence, and then we make a decision quickly. I mean, that's one of the benefits of family office capital is it's a little more flexible. It can happen very quickly. And that's kind of the process. Are we going to do any social media? Probably not. I don't know if we have a LinkedIn page.
We have a LinkedIn page and we have an email address on our website at element.ventures. And we respond to all those. And
if someone has a good idea, they're going to make it to our conference.
Yeah, we're going to
in VC, you kind of do two things. You just don't play that game at all, or you become a media company.
Yeah.
Right. You become like A16Z or like VC start having podcasts. Like it's like one of the, you don't really do the middle approach.
Yeah.
You just do one or the other.
And I don't think we won't become a media company. That was really never our strategy
Yeah.
at Peak Ventures. That's not our strategy at Element. But I think we will be responsive. We do care about the market. We do care about Utah. We do want to invest in the best and brightest up and coming entrepreneurs. I mean, that was the genesis of what we started 12 years ago. And I think that ethos continues. And yeah, it's not hard to get in front of us.
Yeah. Finally, and I know like there's no hard and fast rules because it's your own money and you get to decide. But what do you think the average check size will be?
I think 500 grand is a good initial kind of check. I think that's what we would say. But we've made investments anywhere from, I'd say, even 100 grand to a couple $1 million, probably 100 grand to $2 or $3 million. So.
A lot of the pre-seed stuff they don't need 500,000. And so sometimes it's maybe 100,000, but then we're in the next round and the next round after that. So 500 is probably a good average. But like Jeff said, there's been other larger PE buyout deals we've done at much larger check sizes. But probably, 500.
Jeff, and Jamie, thank you so much.
Okay, this is awesome.
For coming. This is fun. That was super cool. Congratulations. Go to element.ventures.com. No, element.ventures. That's it.
Element.ventures.
Yeah. No .com. There's no .com.
That
Okay.
was,
Thanks,
that
guys.
was web.1.
Congrats on the mustache,
Thanks,
Clint.
Clint.